What I've learned in my career is the data is the data. We all have an opinion, but sometimes you have to separate yourself from that.
Welcome to Midland Money Mindset, your weekly dose of inspiration and insights to ensure you enjoy each step of your journey. Whether you're saving for the future, planning your next big adventure, or simply looking to add more joy to your life, you've come to the right place. Now, let's dive in.
Too many investors get lost in the noise, doom and gloom headlines, hot takes, and endless confusion. The pain is real. Uncertainty steals confidence and joy from financial decision making. But imagine a vision where markets make sense, where history and data guide you with clarity instead of fear. That's exactly what Ryan Detrick delivers. As Chief Market Strategist at Carson Group, Business Insider's Oracle of Wall Street, and co-host of Facts vs. Feelings podcast, Ryan transforms complex market trends into clear, empowering insights, helping families invest smarter, tune out the noise, and build lasting wealth with confidence. I'm Larry Sprung, your host for the Midland Money Mindset and founder and wealth advisor of Midland Financial. Let's dive into the show. Well, I am super excited today to have Ryan Detrick, Chief Market Strategist at Carson Group with us today, and a good friend of mine. Welcome to the show, Ryan.
Larry, I'm honored to be back. There's a lot of fun stuff we're going to talk about today.
The little fun fact, which you just brought up, you are one of the few people that we've had on for a second time. And on your first show, we didn't do video at that time. So that's something new that people will see. They'll be able to see what you look like and I guess compare your picture on here to your CNBC appearances somehow.
One thing about me is I'm out there.
Yes, you are. Yes,
I'm out there. So I literally this morning, I did a podcast, I did a TV hit. And I got one person on X every time I say, hey, I'm on CNBC. And he's like, Ryan, fix your collar. Because once or twice I go on TV. I mean, I'm organized, but like, I'm not all about the appearance. You know, I don't know. I probably should work a little more. My wife's like, you're wearing that shirt again. You just wore it on TV. She's like, people watch you. I was like, oh, yeah.
Well, my chief marketing officer, who you know is my wife, she keeps a spreadsheet of what I wear on what show so that I don't duplicate it from one week to another.
Okay.
Yeah.
That's impressive.
Yeah.
That's impressive.
So Ryan, listen, before we dive into what you're doing today and your work as Chief Market Strategist at Carson Group, can you share with our listeners, maybe they didn't tune in the first time and maybe this is their first experience hearing from you. Can you share a little bit about your background and kind of what led you up to your position today with Carson Group?
I went to Xavier University in Cincinnati, Ohio back in the late 1990s. Got the bug, right? The stock market, bubble, burst, boom, internet, all that stuff. And I always liked math. Thought I'd be an accountant. I hated accounting, so I'm not going to do that. And then I just got the bug. I mean, I love the idea when it's going up. And then when everything crashed, I realized I actually had some play money. I was making money. Everybody making money. It's easy. You watch CNBC. They say the words like Sycamore Networks or Juniper Networks. They I can say them because they don't even exist anymore. Not a recommendation. I don't think they exist. All these companies don't exist anymore. They'd say them, you'd buy them, and they go up. It's like, oh, this is easy. And then everything crashed. But then I learned a lot of people made a lot of money on the way down. And I was like, wow, you made money on the way down. That's pretty cool. And I was hooked. And I've been waking up every day for the last 26, 27 years just excited about what's happening. And obviously, I worked at an options newsletter for about 10 years. So I got my analytical mind. I started doing media, started leveraging social media, started doing TV probably, I think 20 years ago with Reggie Jackson. Yes, that Reggie Jackson. That was my first TV hit with Bill Griffith, Reggie Jackson, and Ryan Detrick. I don't know how I got there, but we bought some spot with something. Anyway, so I started leveraging social media a lot. And then opportunity arose to work at a little place called LPL Financial, not that little. Guy named Burt White, our current CEO over at Carson. He hired me at LPL to be the, I think I was, senior. I was called Senior Market Strategist there almost 10 years ago. Worked at LPL for about 6 or 7 years, got my 7-year itch, wanted to do something new, something different. Bert had left and went to Carson Group, and he talked to me for a while about the opportunity to kind of do literally a lot of the same stuff, but to have more of an impact, right? At a big company, it's hard to have an impact because everybody's got an opinion, this and that. And Carson's big. I mean, we're about to cross $50 billion. Maybe by the time people hear this, we'll be there. We're really, really close to $50 billion. So we're by no means small. but the opportunity to help lead a research team to do all of the cool stuff that we get to do for our Carson partners and your clients in the industry and all the stuff we do, we can get into it, was very, very appealing. So I've been with Carson now over 3 years. It kind of feels like a long time. It sometimes feels like yesterday. It's hard to explain, but it is a blast to work with some of the best people. Like literally, I get to go to work with some of my best friends. Like that's pretty cool. And get to work with people like yourself and all the other amazing partners. So anyway, a lot there. But I just love waking up in the morning and seeing what the rest of the globe is doing. What's the yen doing? What are bonds doing in Europe? All the stuff that happens. It doesn't matter. Does it not matter? What's the story behind it? How can we help tell a story? And how can we help people invest their money to hit their long-term investment goals? And that's kind of what we try to do every day, and it's a blast.
Yeah, and thank you for doing it. It's been a pleasure working with you thus far, and I hope you're not 4 years away from your next 7-year itch, because I hope to continue working together for a very long time to come. But normally, I do not timestamp episodes, right, in terms of when we're recording them. But I think it's important for people to know that we're recording this on Friday, October 3rd, just for reference point for some of the dialogue that we might have, because I'm going to open up with a big one here. And you have been a bull for the last several years amongst the loudness of many bears. Some have even really called you out for it along the way.
Oh, yeah.
What's been your source of positivity, and why have you been so bullish over the last several years when, quite frankly, others were not?
Yeah. Larry, I mean, I've done this a while, like we said. What I've learned is if everybody's thinking alike, somebody isn't thinking. General patent, I use that a lot. And this time, exactly 3 years ago, we had a vicious bear market. We had interest rates. We had the Fed hiking. The terrible war was going on in Europe and still happening. And you're looking around, yet we were seeing some potential positives out there, but everybody was bearish. So a lot of bad news was priced in. Then Sonu Varghese, obviously, Sonu. I work with Sonu very, very closely. See if I get his title right. VP Global Macro Strategist. He looks at the economy and the macro views, and he's saying, listen, the economy's not as bad as they're telling us. So when we stuck all that on top of it, in 2023, the second line of our outlook that came out the second week or first week of January, we said, listen, with some good news, we could hit all-time highs. That was going to take a 25% rally. No, we did not quite hit all-time highs. We did early in 28, but we got a lot of accolades, I guess you could say, in 2023 for going against the grain, against the crowd. Because again, what I've learned in my career is the data is the data. We all have an opinion, but sometimes you have to separate yourself from that. And we shared a lot on why the market was going to likely do much better, why the economy is going to avoid a recession. Good news, we continued to be optimistic in 2024. Quick story, actually. We like stories, right?
Sure.
The first half of 2023, I kind of stopped going on a particular, I won't say exactly which show, but one of the shows on CNBC that I went on a lot. And I reached out to the producers, hey, you haven't had me on in a while. Do you want me to come on your show? And she goes, you're still bullish, right? I'm like, beating my chest, like, yeah, we're still bullish. This is probably April, okay? So the market's had a great start. And she goes, yeah, we're not really having any bulls on right now because they don't really get ratings and really nobody else is bullish. This is honest to God, Larry, what I was told. So I go back to our team and I'm like, buy everything. I mean, this market, and here we are. And now I'm on this particular show about once a month and everything's fine. But that was the attitude that your clients are hearing, all the listeners to this podcast are hearing, that everybody out there is hearing. And I love CNBC. I go on, they've helped my career, and I love everything about it. But again, that was the attitude in the industry.
Right.
Why are you possibly bullish? This market only has one way to go, is down. The average strategist in a Bloomberg survey at the start of 23 looked for a negative stock market. Go back 35 years, never happened before. Okay. Like, you were so against the grain to be optimistic. Now, by nature, I'm kind of an optimistic person. So I always think, well, is it really going to be that bad? Maybe not. So that's kind of the gist of it. And Sonu and I talk about this stuff all the time. Our team talks about it all the time. And we're still following it. And the good news, and we can get into a little more if you want, but we're still pretty optimistic that this is still a bull market. And we've still got some legs left to it, even 3 years into it.
Yeah. Well, thank you for sharing that. And thank you for being right. And for those listening that may not be aware, just to share one of the benefits of us being a Carson partner and things that we're able to share with the families we serve are our yearly outlooks that you and your team produce in January to share with the families we serve. And then we do the mid-year outlook in July to show them how we've moved along and whether we're right, wrong, and are we making any adjustments. And those have been fantastic resources for the family. So thank you for that. One of the things you always do, whether it's on here or on your appearances or even just presenting to us partners, is make commentary for investors fun. Why do you think it's so important to make it fun for the investor?
Because I get bored. I mean, who wants to talk about the Fed for an hour? Like, I don't. I mean, that's kind of boring if you ask me. So obviously, not obviously, but in my career, another little story. Like, I saw a guy named Sam Stovall probably 20 years ago. He's at CFRA now. Sam's awesome. Anyway, I saw him 20 something years ago, and he was hilarious. He was funny. He was engaging. He had his stats. And I said, I was a young kid then. I said, I kind of be like that. And then I'm not going to call out who this was, but I saw another huge name. So when I was so excited, probably within the same year, I was so excited in New York City at a big conference. I was so excited to see this person. Larry, I'm falling asleep. The guy was like, and the advanced decline line, it was so boring. Yeah. And I'm like, but it was great content. I'm like, if I can take great content, but make it also kind of fun and entertaining, also for me to be engaged, to be honest, that's the magic elixir, I think. And obviously, Burt White, our CEO here at Carson, is, I think, the greatest public speaker, not just in financial, but anywhere. You put the lights on, Burt is incredible.
He's a great storyteller. Yeah.
He's an incredible storyteller. And yes, his content's incredible. But again, it's how you deliver it. Is it fun? Is it engaging? Is it actionable? Is it right more often than not? Those are things that I found. And another quick little story. So leveraging, I started using, it was Twitter back then, in 2009. Now I've got almost 200,000 followers on, I guess we call it X now. Mm-hmm. So I can do a tweet and it literally gets quoted on CNBC. Like, I mean, I've done this for a while. People know me. But what I found at a pretty young age, leveraging social media back in 2009, 10, 11, 12, before it was really big, was people liked the story. People like to say, hey, listen, the last, we're up, okay, we can probably say this because it'll happen when people listen to it. S&P's up 5 months in a row right now. Who knows what happens in October? When the S&P's up 5 months in a row, the next year, so the next 12 months, has been higher 29 out of 31 times. Just that little kind of history lesson to show, we've been here before. The government shut down. Who knows government's going to be shut down when people hear this, but we're in the middle of one right now. We've done just fine. We've had government shutdowns before. I'm not saying I'm crazy about Washington dysfunction. Nobody is. But the market takes these things in stride. If you can show a little history, add a little flavor, add a little fun, add a little joke here or there, a storyteller. Those are things that I found in my career help differentiate me specifically from a lot of other boring strategists who just talk about valuations and CAPE and all this stuff that not that fun, I guess. Yeah. Just try to make it fun to connect with people.
Definitely not a lack of fun when you're delivering, your prognosis and what you see is going on. So I appreciate that. And quite frankly, speaking of fun, your podcast with Sonu called Facts vs. Feelings, which I believe is probably one of the best names that's out there because I think it really represents some of those things that are going on in the world. It's really one of the leading voices in the space and something that's available to those investors out there. What is your goal? What are you hoping to deliver to your listeners and those listeners to Facts vs. Feelings?
Well, thank you. Yeah. So we've done, I believe, I'll put it this way, over 150 episodes of Facts vs. Feelings. It's a weekly podcast about all the real-time macro market stuff, economy stuff, Fed stuff, all that stuff that Sonu and I do. Comes out Wednesday morning. Get it wherever you get your favorite podcast, Facts vs. Feelings. At the end of the day, what I'm trying to do, I look at the podcasts I listen to. I want things to be actionable. I want things to be fun. I want things to be real time. I want people to dig in a little bit more, but I don't want it to be boring. I don't want it to be too dense, like most people can't understand it. I've made a career. I mean, I'm not that smart. I made a career talking big picture. I made a career taking complicated data, but trying to make it easy to understand on the other side. And that's the stuff that I enjoy doing. And I bring a certain aspect, and then Sonu brings a certain aspect, and you mold it together. And I think it's been really popular.
One of the things that you do really well in your content is specifically having, really powerful charts. Yeah. We just used one recently with the families we work with regard to the government shutdown that you reference, how, there's not a lot of impact that these government shutdowns have. But these powerful charts that you've put together have been featured on things like Yahoo Finance, The Compound, CNBC, other major outlets. Where does your passion for and knowledge of this historical context of the markets come from? Because you're always looking backwards at things that have taken place and kind of using what's going on in today's situation in context to really what's happened over many, many years.
Well, thank you for that. So another favorite quote of mine, Mark Twain, history doesn't repeat itself, but it often rhymes. No, every time is different, this and that. We get that. But again, when you look back at these things, you can find this. Now, in my past life at a small options firm back, I guess I was there for like 2003 to 2014. And that's where I got my analytics mind, right? To leverage data to tell a story. I use Excel. People say, how do you create? I mean, literally any chart you ever see me share anywhere, I use Excel. That's what I use. So I'm pretty good with Excel. So again, there's a lot of cool stuff. I think a picture is worth 1,000 words. Is that the expression? And I totally agree. And I write blogs, right? We write blogs, we write commentary. I mean, I'd rather write a blog with 10 cool charts with not a lot of words than 3,000 words. And a lot of people probably feel that way because you can really learn a lot by creating, whether it be tables or charts or line charts or log charts, all the different imagery, I guess, that we help create and I help create. Now, where I get it, I'm not sure because my wife literally can tell me to take the garbage out and I'll forget. Okay. like 10 seconds later, I'll forget. But I can remember a stat about what the stock market did or about what some Cincinnati Bengal did 30 years. Like I can remember that stuff. Now, a lot of guys are probably not all that different there, but I've always had a real knack for kind of history and just remembering, I wouldn't call it useless stats, but, kind of fun, trivial stats. And it's just kind of how I've always been with the numbers aspect of it. And then obviously in the industry I'm doing, a profession that I do, it comes through. But I think those are just things I've always enjoyed. I mean, I leverage social media, follow a lot of smart people there to get ideas like, oh, okay, if, the market did this, and this, and I kind of think, how can I build on that? What can I do? 20 years ago, there wasn't a lot of information. It wasn't shared. Nowadays, so many people shares. I shares. A lot of people share stuff. We kind of build on it. It's a real community out there. And a lot of people don't like social media for different reasons. And I totally get it. But you can have a filter. If you have a social media problem, you have a filter problem. You don't have to listen to all the crazy stuff that's out there. You can follow really smart people that really are there doing it for the right reasons. And I think that's what makes right now, like literally right now in today's world, so cool because some special report from Goldman Sachs that literally nobody had access to 20 years ago, it's probably going to be on social media 5 minutes after it comes out, right? That you can't hide anything anymore. You can't BS anybody anymore. And I think that's really, really good because there's so much more trust. If you followed someone for a while, you know what they stand for.
I agree. I mean, I think the profession's changed quite a bit. When I started in the profession, and probably certainly when you did as well, it was you had to work with an advisor because they had information that you didn't. And now everybody has that information. Now they have knowledge in what to do with that information and operate it maybe in a different capacity a little bit better. Do you know finances can be joyful with your partner? We created a fantastic guide for couples to start their journey surrounding their finances. Head over to Midland.us/couplesjoy to download your free copy today. Don't miss out. Start bringing more joy into your financial conversations. You just talked about social media again, and consumers are going there too. Investors are going there. Why do you think it's so important for investors to think about the sources of information they're listening to and the advice they're taking? Because many of them are now relying on X, relying on YouTube and other devices?
That's a great question there. The truth is, what I've noticed in my career, and it's not any different now than it was 15 years ago, leveraging social media, fear sells. It almost sounds like, oh my goodness, there's a crash coming around the corner. Come on over here. Let me put my arm around you. I want to help you. And the same bears that have been saying this literally for 15 years are still saying it. And it drives me crazy because, again, it's like versus a guy like me who 2 years ago said, you know what, things aren't so bad. We're going to go up a lot. People think, he's a huckster. He's this. I get called all the time. Well, he's always talking that way because he works in RIA. Yeah, to a degree. If you're a market strategist in RIA, I am always cautiously bullish, cautiously optimistic. Because I look at history, stock market's up 74% of the time. Every 16-year period, stock market's never been lower. And I think what's neat, one other angle on this, here's the honest truth. I've got Carson behind me, but people like me. People like you, right? You kind of like the person. And you like, do I want to work with someone like that? Do I trust that person? Or the entity like Goldman Sachs? Okay, well, you might have an opinion on Goldman Sachs, but it's like, do you trust the economists there? Like we love some of the Goldman Sachs economists, for instance. Do you like the people that are there? And it's a lot easier now than ever to know the people, kind of like what Wizard of Oz, who's really behind the curtain, who's really running the show. In the past, maybe you didn't know. In today's world, you do. And again, that can be good and bad because there's so much information out there. There's information overload. There's filter problems. There's all this stuff. And I love to read. I love to consume data. And sometimes I get myself in trouble, not trouble, but I get myself overwhelmed by, oh my goodness, now my other friend is a podcast. Now, so-and-so started a new blog. I just want to read it all because I love this stuff. But you can get overwhelmed, Larry, by too much. But the good news is hopefully you have a quick trigger finger, if you will, to get rid of some people, not get rid of people, but get rid of resources you're using if you don't like them. Right? If they're not working, if that podcast isn't as good as it used to be, or if that research isn't cut it out because there's somebody else doing it as well. And you can find that new one that works for you.
Yeah, I agree with that. And you mentioned just a moment ago, you talked about being in an RIA, right? Yeah. And I think that's something that's certainly taken an evolution in my years in the practice. RIAs have been around for longer than I've been in the profession. It was just something that I really wasn't aware of when I initially got into the profession. And I think today, people who are entering the profession are much more knowledgeable and understand what the RIA model is all about. And I really think it is the future. And I believe you do too. Why do you feel like the RIA model is the future of advice?
Boy, that's a good question there. I mean, I just think of my past life. Like at a really big place, really big, you're just a number. All they care about is the next advisor. All they care about is the next big place they're going to buy. All they care about is going from 22,000 advisors to 50,000 advisors. And you're thinking to yourself, gee, am I going to get the same support that I do now? Probably not, right? So by nature, RIAs are a little bit smaller than some of these huge wirehouses. Now, hopefully we keep growing and we get there. At the same time, what I absolutely love working like with yourself, for instance, you are, I'm going to say, a small business owner, right? Mm-hmm. You run your company. Carson, the name behind me and the name on my shirt, we're there hopefully every step of the way for you to leverage, for you to use. You don't have to use the research team. You don't have to use the marketing team. You don't have to use this. You have to use some of it. But we're there to help small business owners grow their business. At the end of the day, help them grow their practice, help them become better practitioners, help their clients reach those investment goals. So those clients, when we have a 10% drop in 2 days, like we did after Liberation Day, a near bear market, but a lot of the Mag 7 were in a bear market back in April, you need probably support then to help your clients understand what's really happening. Because I'm not just you, Larry, but in the industry in general, a lot of clients said, get me out. This is crazy. I don't know what's going on. This is bad. This is bad. Sell, sell, sell. Unfortunately, a lot of people are going to do that, and a lot of people did. But that's our job as a research team to help you and help empower all of our amazing Carson partners all over the United States. And I think we can have a lot more impact at a fast-growing rocket ship, as we call it here at Carson, being one of the largest, fastest-growing RIAs. And again, flirting with $50 billion, very, very close. Could happen any day now.
Yeah. I think the RIA model is just so much more flexible, is what you're saying. We're able to act in the best interest of the families. We don't have to serve a larger corporate entity. We can serve the family. They are our larger corporate entity. We're here to serve them, not a large corporate model. So I think those are hugely beneficial.
Man, listen, a lot of RIAs are not publicly traded, last I checked. When you're publicly traded, who's the real boss? The shareholders, right?
Yeah. And some have gone public and then come back private because I think that they got wise to that situation, right?
Very good point.
Yeah. One of the things that you can't get away from talking about these days is AI. I mean, everywhere you go, you're hearing about AI. How do you think AI will affect the average investor? And what role do you think it'll have in helping us advisors serve those investors?
Yeah, it's not going away. That's obvious. From an investments point of view, there's just so much more information. I mean, we use it a lot. You just think about, okay, what's the last 10 government shutdowns and give me some stats on it. You put that in AI and it's going to give you that data that might in the past have taken you, I don't know, a day to come up with. You've got it in about 2 minutes. Right. And it's not just financial, it's everywhere. Obviously, we have Steve AI, right? Our chatbot here at Carson that I know advisors and partners love to ask simple questions and get the answer right away. We are moving full steam ahead. Danny Fava, right? My boss, right? I mean, she was hired for a lot of different reasons, but one of them was to make sure Carson doesn't get left in the dust, so to speak, with AI and to be able to leverage it and to be able to do that. And we're doing it. I mean, we just met recently, a lot of the stakeholders in Omaha where Carson's based, and we had a lot of fun discussions and different groups, different departments is what I should call it. Different departments of Carson up there talking. I mean, every one of us are looking into AI and leveraging it and using it more and more. And that's just something I think that's going to continue. And from the advisor point of view and from the client point of view, similar to some of these conversations we've had, AI is good and bad because there's going to be so much. I worry. What do you think about this one? Like, someone could have your voice. Someone's got my voice by now. I'm kind of grovelly, though. Someone's got your voice, Larry. I mean, client could call you up with a fake AI voice and say, hey, Larry, sell everything and send it to this place. Now, I know there's filters and stuff, but the reality is there's that part of this coming. How do you try to make sure you don't get caught up in that?
Yes. I mean, one of the things that we have, first of all, we don't do anything via email, right? Because that was the first stage where people started spoofing and saying that they were somebody and they weren't. So we always led to a phone call. And I think now we're leading to asking more probing questions sometimes that we would only know and the client would only know to kind of ensure that they are who they are.
Yeah, no, well said. It's not slowing down, but I think it's going to, as someone who just looks at the world from an optimistic point of view, I think there's just so much so many more positives and negatives coming. We hear the potential negatives. People are going to lose jobs. The machines are going to take over. You look at history, during every major revolution, some jobs went away, yes. But usually there's a lot more jobs the other side. I've made the joke for 2 years now. If you're an umpire, I'd be a little worried. I don't think we need umpires. Balls and strikes, I think AI can do it better. But other than that, there's going to be a lot of opportunity. We'll just have to kind of wait and see. I mean, 25 years ago, who knew you could push a button on your phone and someone brings you food and you could be the person to bring somebody food? That sounds crazy 25 years ago. It sounds crazy 10 years ago. And here we are.
Great. Well, listen, I want to talk about the next generation who may be coming into their careers, right?
Yeah.
Because you're active on social media. And on episode 245, I had Adam Rossi on, and he and I chatted about the power of building your digital footprint, right? Because I think a lot of young people, although they're active on social media, they're not really intentionally thinking about building a footprint, right? What advice do you have for those who are younger in their career, maybe in college or getting out of college in their first job? I think they should start this in college as soon as they're a freshman, if not earlier. But what advice do you have for those who are younger in their career as it relates to crafting their own brand?
Boy, that's a good one there. I'll answer that in 1 second. I do a lot of these. People reach out, and I just had one this week with a younger guy in college. And, I said, I think for like a first job, and I'll get there in a second. If you can work at a big company, meet a lot of people. Maybe it's not the job you're going to stay at forever. That's fine. But you never know. Like, I spent 7 years at LPL. Like, you never know who you worked with the first or second year who went somewhere and then they're over here, and you see on LinkedIn. The next thing you know, you're kind of make a deal together, right? You can really have a big network potentially if you do work. And believe me, everybody's different. You don't always need to do this. But in a perfect world, first job, you can meet a lot of people because networking. Listen, Larry, I have been fired, I have been laid off, and I've quit on my own. Okay, so I've seen them all. It's a lot better when you quit on your own.
and I say network equals net worth. I say that all the time.
Exactly. And then when it happens, and here's the honest truth, everybody, it's going to happen to you. All right. You work in the financial industry specifically, something's going to happen like that because that's just the truth. Again, it's happened to me. Okay. And it happens to literally everybody. So again, to have that network, and maybe it's not so much to help yourself, but maybe to help somebody else when something happens to them, because you never know who you help now, if they can help you down the road. And that network is so important. But specifically to your question, though, yes, like when should you have started? Yesterday. If you can't start yesterday, start today. We're hiring. Our team's growing. I mean, I see things about how hiring is slowing down in some of the areas. Labor market's slowing down at Carson. We're hiring like crazy, which is good. We're growing and we need it. Trust me, we need the help on our research team specifically. We're hiring. So you absolutely want to look at somebody and see their social footprint. Like, do you have a blog? Do you have a podcast? Do you have videos, your YouTube channel? I know some of that stuff is kind of overwhelming to start in the initial stages, but it is real because employers are looking at those things. And I like it just to get your thoughts out there. And again, trust me, when I was 21 or 22, I had no idea what I was doing. I knew I liked the stock market, but just to start to do it, I say I write to know what I'm thinking about. It sounds weird. I just start writing and start thinking and start creating. And then something else, I can't tell how many times I started writing a blog, Larry. And then by the time it's done, it's kind of not at all what I started with, but it's still pretty good. It's like how I got there is really neat. And I think that's just so important to just get your voice out there. Last thing on voice. you have to find one, right? You have to start doing it. You have to find what you're good at. You have to find what you like. You have to find what you're passionate about. A lot of young people don't know necessarily. I didn't necessarily know either. It's not like this is easy. But once you kind of find what it is, finding it good at it, right? I mean, I've found that I'm kind of good at just talking, telling stories, just being myself, leveraging that. Whatever it is you're good at, find it and do it over and over and over again and perfect your craft. And it'll help you without doubt down the long run.
Yeah, I think that's great advice for our young listeners out there. So, Ryan, it's always a pleasure talking with you. And we ask each of our guests the same final question. And our listeners are always waiting to hear what the answer is because it runs the gamut. So I'm going to ask you the same. And that is, what did you do today that brought you joy and put you in the right mindset for success?
Yeah, let's see here. So today, I mean, can I say the podcast we did? So I'll answer it. This is a good one. So my wife is down in Charlotte. We live in Charlotte. Yeah. So she flies down girls' weekend, gets her hair done and some stuff. Anyway, I literally, Larry, last night and this morning really cleaned the house because we have our cleaning ladies coming, but we have to clean the house. And I don't normally do that.
I never understood that, by the way.
Yeah, well, we've got 3 kids. It gets messy, man. Emily's like,
you got to clean before the cleaning staff comes.
I worked my you-know-what off, getting the house in order. And I don't normally do that. That's just kind of how it is. And in a way, I feel pretty good. I feel good. Like I was telling her like, hey, I got this done. She's like, give me this list of all the stuff you got to do. And I did it all. And it felt pretty good. And she's kind of like, do you want a parade now? She does it all the time. And I get it. I get it. I felt good about that. And it was good. Some manual labor. And trust me, I know what I did is not pure manual labor. I get it. But again, just to do some things like that, I felt pretty good about that. A little different. And honestly, I've got one kid I got to take to football practice at 5:40 in the morning Eastern time. Got to get another one on the bus, my daughter. So I've done a lot the last 2.5 days. And listen, any single parents with kids, and it is not an easy job at all.
A lot of respect. Agreed.
Thank God for my wife who does a lot of this and all the amazing spouses everybody has to help get stuff done. You've got 3 kids like we do that are pretty darn active middle school and high school. But I feel pretty good about myself that my kids are all alive. Everyone's happy. The dog didn't bark during this podcast.
There you go.
And it's been a busy couple of days. We're looking forward to mom coming home, though, to say, okay, tag, you're it.
Take a little breather. Well, thank you for sharing that, Ryan. And listen, we're going to have all your information in the show notes, but if people want to learn more about you, connect with you, learn more about Carson Group and their research and what you do as the Chief Market Strategist, what's the easiest and the best place for them to go?
There's a couple of them. Facts versus Feelings, our podcast. Sona and I talk about all this stuff. You can learn a lot there. Obviously, like we mentioned, X at Ryan Detrick, Detrick, all one word. Of course, I'm on LinkedIn as well. You can find me there pretty easily. Or carsongroup.com/research is our daily blog. And I do share those on LinkedIn and Twitter, or LinkedIn and X. Sony writes, Barry writes, Grant on our team. We've got different people on our leadership team and the research team all right on that blog. So we talk about a lot of cool stuff that impacted financial advisors and clients and the industry in general. It's another nice place to go.
Awesome. Well, Ryan, thank you so much for taking time out of your busy schedule to share your thoughts with us. I really appreciate it, and enjoy the rest of your day and the weekend.
Well, Larry, no, it was an honor to get to do this a second time. Think the world of you, all the incredible work that you do for your clients and for our industry in general. I love how you're always forward thinking and doing podcasts and doing videos and doing this and doing that a lot of other people aren't. And I'm not saying all of it's going to work, but I love the fact that you're willing to take a chance. You're willing to step out of your comfort zone and do something a little bit different to try to make an impact. I'm very similar, I think. So I respect that, and I appreciate you and obviously Denise and the whole team. And just thank you again. Look forward to the third one. Whenever it is, I'll be there.
Yeah. All right, Ryan. Well, thank you. Appreciate it.
Thank you.
Ryan, thank you for bringing your wisdom, optimism, and market insights to the Midland Money Mindset. You've shown us that even in times of uncertainty, history, data, and perspective can guide us towards smarter investing and greater confidence. Your passion for making finance both understandable and empowering is exactly what our audience needs to hear. We're grateful you shared your time and expertise today. It was truly a joy having you on the show. Ryan Detrick and everything he's up to can be found across most social media platforms. All the contact information needed to find him can be found in the show notes.
Thank you for joining us on this episode of Midland Money Mindset. Remember, it's not just about the money, it's finding joy in the journey and embracing the right mindset. If you love the show, be sure to subscribe, rate, and leave a review. Don't forget to follow along for more tips and inspiration. Please visit the social links below to connect with Larry or his guests. Until next time, keep smiling, keep thriving, and remember to think about, what did you do today that brought you joy?
The opinions voiced in the Midland Money Mindset Show with Lawrence Sprung are for general information only and are not intended to provide specific advice or recommendations for any individual. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested into directly. Investing involves risk, including possible loss of principal. No strategy ensures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Guests on the Midland Money Mindset Show are not affiliated with CWM LLC.